Hello traders, Gary Wagner here, 11:45 in Honolulu, 5:45 in New York on Thursday, 20th day of June 2024, and this is the evening report for gold and silver. As seen in this 30-minute candlestick chart, gold prices surged to their highest levels since June 7th, with August futures settling at $2,372.60, a net gain today of $28.40. In fact, in only 8 days, gold has recouped much of the $84 loss that occurred on Friday, 7th day of June. Traders, if you recall from the special morning edition that we released on Tuesday, addressing the fact that we had some solid technical evidence that gold had found a bottom and would trade higher. Realize the largest caveat to that assumption is that any fundamental report that is counter to that will invalidate that model completely. Markets move based on market sentiment, and market sentiment is based on fundamental events. However, in the case of the model that we were looking at, all of the recent data has actually confirmed that, and we have seen gold tick much higher. Today was a major milestone in terms of price ascent, not so much for the $28 gained, but for the fact that it broke above the recent tops that have really been an earmark of resistance at around $2,348. It's above the 21-day exponential moving average, the 50-day simple moving average, which is a solid piece of technical evidence that gold has now entered a bullish cycle. The reports recently are showing that inflation is declining and is also contracting. But the real market sentiment shift is renewed optimism on rate cuts by the Federal Reserve, because the data the Fed is expecting to see before initiating any rate cuts this year is consistent readings of reduced inflation, which leads me to our current technical analysis. First, now that gold has traded and broken above the 21-day exponential moving average, and more importantly, the 50-day simple moving average, we are labeling our level of support at the 50-day moving average, 2355, down to the 23.6% fib retracement at 2348. The market is trading at 72, so it's only $20 above, but that should be a level we want to look at as a level that must be held in terms of technical support. That being said, let's take a look at our current levels of resistance. For that, we're going to look at recent tops, and the thing that stands out the most is the opening price on Friday, June the 7th, when the jobs report resulted in an $85 drawdown. It opened then at $2,395, which also aligns to the tops that occurred back in the middle of April, roughly at the same price point, $2,400 to $2,407. Absolute major resistance occurs at these recent highs, in which we had a close of $2,429, and that is the brass ring. A break above that, and we are in new unfounded territory. Lastly, a look at silver. Silver had a phenomenal move today, well above a 3% gain at $1.18 in New York trading. The first indication really came a couple of days ago when silver broke back above the 50-day simple moving average. That occurred on Friday, June 14th. We did see a trade sideways, but today, silver opened above the 50% retracement, 50-day simple moving average, and propelled higher. In terms of technical resistance, the first level we would look at is $31.17.5. Silver is currently at $30.80, basis the most active July contract. The brass ring, in terms of major resistance that we want to see taken out to get to a high we haven't seen in years, is $32.69. And that is based upon these highs that came in towards the end of May. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.